Hey everyone, Hana Cassis with the Stock Market Academy. I've been getting a bunch of requests from subscribers to start doing videos just so I could put some words to the charts instead of reading it necessarily. So, my objective at the Stock Market Academy is to always find a learning opportunity from live price action. And so right now makes for a great learning opportunity because we're seeing the market come off of the lows. But the biggest question everyone is facing, if you get on CNBC right now, you'll notice that everyone's asking, could this rally last? The reversal that we saw after the Fed announcement on Wednesday, the market rallied. It's been like the fourth or fifth, 4 or 5% move in 2022, but none of them have seemed to last. So how do we tell if a rally is going to last? Here's a perfect example. In February, we saw a reversal. This is what's called a Japanese hammer candlestick. And it happened at the lower Bollinger. So that means price was dramatically down during the session right here, and then it rallied to close positive. That tells us that there might be a rally that follows through. And that is exactly what we saw until we saw another Japanese candlestick known as a pin top or a doji at the 20-period moving average. And that's where bears stepped in and they sold into capitulation. So how come this rally didn't last? And how do we know if this rally will? Well, one thing I'd like to impress upon is that you have to drill down on the lower time frame. So this is a weekly chart. We're looking at the weekly chart since December of 2020. It gives us a little more than a year worth of data. And we could see the market rallied, peaked in January. We had a bounce at the end of January. This was another pin bottom that rallied a little bit, but it got shut down twice. And then we had another pin bottom, the hammer candlestick. And we saw a rally follow through, but if you really want to drill down on it, you could go right here. This part I have circled is the same part I have here. So you could see that we had a downtrend line, and we identify a trend by a series of, higher highs and higher lows if it's an uptrend, or lower highs and lower lows if it's a downtrend. And so here we have a series of, we have a higher low, we had a low here, and then we had a higher high, higher low, and then we had a failed high. That tells us that there might be some trouble in the market. And then we had a lower low, and then we had a lower high, and then we had a lower low, and then we had a lower high. And then the market kind of found a floor here, right? And we saw the rally. But then we saw the pin top. This candlestick was a major reversal on the weekly chart, and then we saw the action. We saw it sell off from the end of March, and we started to create a series of lower lows and lower highs. So this is the chart that I look at basically 24/7. This is the only chart I really follow because I just trade the SPY, which is the ETF that follows the S&P 500. And here at the end of March, you'll notice that we had a higher low in B, right? We had the higher lows, and then we had higher high, higher low, higher high, higher low, but then at C, we failed. So that tells us that maybe this uptrend is not here to stay. And we then made a series of higher or lower lows and lower highs all the way down I, J, K, L, M, N, O, P. Here we had the first sign that the market might be turning. But if you look at the weekly chart, you'll notice that we formed another Japanese candlestick reversal. And the market did falter a little bit afterward. And then we had that impressive rally that began Wednesday after the Fed announcement. And then we had inflation data that came out that said that the growth rate is decelerating. It's getting slower. And we also had really good news reports from Dollar Tree, which is a consumer goods company. And they were able to weather the inflation, which is a sign that it's maybe not affecting as many companies in the economy. So how do we tell the question is, how do we tell if this rally is going to last? Well, I want to point you over, and if you've been following my writing, I'm going to draw a little line right here so that you could see these downtrends. So we had a downtrend there. And then we had from here, you keep plotting the downtrends, right? So that it touches the highs all the way down. And if you notice, we had this one here that was broken. And then there's a saying in trading stocks, and it's a concept called polarity. And I put this in every blog post, every newsletter that I could, where it makes sense, is that prior resistance becomes future support, and sorry, let me say that again. So prior support becomes future resistance, prior resistance becomes future support. So here we have resistance zones. We have a resistance zone here that the market just broke. We have more resistance here, and you can see all those lines from right here. Now, you can see that this line was the February low, this line was a January low, and this line was the May high. These are all potential resistance levels. But the fact that we broke this downtrend line right here signals that that's the second sign that there's a change in the trend, okay? So we had a series of lower highs and lower lows all the way down. Then we had the bottom at N, the rally into O, the sell-off into P, but there was too much buying pressure here. Then the market rallied and it broke through the major support zone, which would be, the initial support zone would be M, and then the next support zone would be basically level M or H, this zone. Now it's important that this line here, that is not the only resistance zone. It is a resistance line. It's a zone. You will see buyers and sellers step in at those levels. We sliced right through that level right here. So tomorrow is a very important trading day because let me show you one thing here. Let's switch over to the monthly chart. I want to show you something. What we're seeing right now on, let's just go 2 years so I can zoom in on this a little bit. So what we're seeing, maybe 3. So what we're seeing now is the S&P was negative, went all the way to 380. This is SPY. Let me go to the S&P, 3,800, and it rallied. So tomorrow, if we end up positive, this is going to close. This is going to be a major buy signal because it's going to close. It could potentially close above the 20-month moving average. A lot of traders pay attention to that. If it sells off tomorrow, then this is going to form a neutral or bearish candlestick. So tomorrow's price action is extremely important to see if we have any follow through on this rally. If we do, it will trigger not only technical buy signals, but it'll also change the psyche of a lot of investors and a lot of traders, and that's when everyone will begin to pile on. So again, the way to tell if a rally is going to last is you got to drill down. I like going to the 4-hour level. I don't think you need to go much lower than that. Again, it depends on what you're trading. If you're a day trader, you want to look at the hourly chart for your signal, and then you want to maybe drill down to the 15-minute chart. If you're a swing trader, you want to look at maybe the daily chart, and then this is what I do. I'm a swing trader. I'm in positions anywhere from 3 to 10 days when I trade. You want to use a daily chart, drill down to the 4-hour or the 1-hour. It all depends on your time frame. If you're a scalper, you're going to look at the hourly chart for your signal, and you're going to drill down to the 5-minute chart for confirmation. That confirmation, when you see those candlesticks, when you see the candlesticks, like we do here, we saw this rally here on the S&P. You want to drill down to the lower time frame to see if there was a break in the trend. We clearly had that break in the trend, so the bias now is to the upside.